The opinions expressed in this show are the views of the host and not necessarily that of WTRW, 94.3 The Talker, or the Bold Gold Media Group.
The following presentation is brought to you by the host of the program, who is solely responsible for its content.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.
Portions transcribed.
Good Saturday morning and welcome to the Your Financial Future program here on 94.3 FM The Talker. My name is Nick Colarossi of NJC Investments, and I'm thrilled that you've chosen to join us once again as we open up the doors to this week's College of Financial Knowledge. Our program originates this morning from the luxurious corner office studio at the beautiful Bold Gold Radio Complex located high atop the waning summer fields of the West Mountain of Scranton, Pennsylvania, the Electric City. Our goal on today's program is the same as it is every Saturday morning at 9 a.m. here on The Talker, and that is to help you to become a better long-term investor. Here and helping me with that goal this morning, the man sitting across the giant soundboard here in the beautiful corner office studio, and that is Mr. DC Taylor, our producer. Good morning, DC.
Good morning, Nick. How are we doing today?
I'm doing just fine. I thank you for being here this morning.
Hey.
Last weekend of August. Can you believe it?
Here we are. Welcome to another weekend, and yes, time is carrying on and getting us closer to the end of the year.
Bite your tongue. Bite your tongue. We still have summer to go yet.
Course,
right. The week away from Labor Day weekend. Weather last week was a little bit rough, a little bit hot. I think it's cooling down over the weekend a little bit for us, but it still looks pretty beautiful. As I look outside the big picture window here at the studio, what's it look like for the rest of the weekend, DC?
It's going to be, as you were saying, a little bit cooler. Chance of showers and thunderstorms.
How about that?
A little bit of a chance.
I think you've said that for the last 10 straight weeks. Go ahead.
Yeah, it's summertime. I guess that's what the weather thing does. But we'll be around 80 today and about 83 tomorrow, and another chance of showers and thunderstorms. Chance of precipitation is 30%, so a 70% chance of no rain.
And I'll take that. 70% sounds good to me, but we'll take whatever comes our way. Looks like a beautiful weekend in store. And let's start it off right here on the program. A lot of material to cover this morning. I think you'll find it very interesting. We are, of course, going to talk about some more inflation hedges. You know, I'm kind of stuck on that over the last few months, DC.
Right. Try
to work in some inflation hedges for your portfolio. Why? Because if you spend more money and you raise taxes, my opinion is you will get higher inflation.
Yeah.
So we want to talk about some things like that. I've brought along a few different ideas, including we left off a little bit early last week with some infrastructure stocks, and being that we have the big infrastructure spending bills now on the table, we'll see what comes out of that. I have an idea there as well. We're going to talk about some stock ideas, and I have a lot, so I don't know what we'll get in, but I have some blockchain ideas in the cryptocurrency area. We have some biotech ideas. We have some growth and value ideas. I have also brought along today a very simple value strategy, great for beginning investors, also great for seasoned investors. We'll talk about that as well. And a reminder, if there's ever anything you hear on the program that you'd like more information on, you can always reach out to me at nick@njcinvestments.com or give our offices a call, 570-586-5030. DC Taylor, you know where our offices are located, don't you?
In beautiful Clarks Green, Pennsylvania.
Not only that,
the financial district.
That is correct, right in the heart of the financial district of beautiful Clarks Green, PA. Well, DC, I think we'll just a quick wrap up of what went on in the markets last week. Jittery week. Of course, our hearts go out to the troops we lost midweek, and terrible. We had a question last week on how I thought Afghanistan in the Mitchell's mailbag segment, how I thought Afghanistan might affect the markets. I was kind of hoping that we wouldn't get to this. And it did definitely affect the markets on Thursday. My take on it last week was, as long as we can kind of get out of here and walk away and put it behind us, I think it would be minimal on the markets. That didn't happen on Thursday. Terrible. And we ask for your prayers for all of our troops, of course, and Godspeed there. But it did affect the markets dramatically on Thursday, but we sprung right back to all-time new record highs on Friday morning on the S&P 500 and the NASDAQ. Why is that? That's because Jay Powell, the Federal Reserve Chairman, came out and pretty much said the tapering will begin before the end of the year, but he didn't signal. Remember, we talked about they're buying 120 billion with a B, 120 billion treasury bonds and mortgage-backed securities each month to kind of keep interest rates down, and that's been helping certainly the equity markets this year. Jay Powell came out and said, hey, we're going to start tapering, but it won't be right away. We were afraid he might say in September. He didn't. He said before the end of the year. And also he said he would keep interest rates low longer than, most people are thinking. He said they're going to stay low. That sent the markets, even with all the turmoil in the world, that sent our markets up on Friday morning to all-time highs. And we'll see what next week brings, DC Taylor. But we've been saying all along, you could have made a case this week to say, that's it. Get the heck out of there's too much going on, right? Get me into whatever, get me out of the markets. And it would have been the wrong move. Yeah. Right. Yeah. So we don't know how everything's going to play out. We don't know what the Federal Reserve is going to do exactly. I don't think they do as well. Our best advice to our clients at NJC Investments, stay the course. Stay diversified. You can't be all in growth. You can't be all in value. You can't be all in large cap. You can't be all in small cap. Have a little bit of everything. It seems, DC, every day a different area of the market is performing while other areas aren't. Stay diversified. Take some profits off the table. If you're overweighted in one area, you have significant profits, maybe rebalance to some areas that haven't. And we'll give you some ideas in just a few minutes of some areas, DC, that haven't participated in these market rallies. Maybe there's some value to be had there. And of course, we recommend that you're working closely with your own financial advisors. Make sure you're kind of sounding off things and then going back and forth, staying on top of your portfolios. If we at NJC Investment can help you in any way, don't ever hesitate to give us a call. It's free of charge, obligation. We love hearing from our listeners. If we can help you in any way, we will. That's 570-586-5030. Thanks again for tuning in to the Your Financial Future program with Nick Colarossi of NJC Investments. And thanks for allowing me to be the soundtrack for your early Saturday mornings. DC, I'd like to finish up some of last week's business before we move forward with this week's business. We were talking last week when we ended up about the infrastructure plan, and I reviewed an article, I believe it was from investorplace.com by Joe Buzzsprout9100670, and he gave us 7 infrastructure stocks to watch because we have 2 massive infrastructure bills on the table. One, they say, for 1.5 trillion, one for trillions and trillions
at this point.
And some of it actually goes to infrastructure.
Hey now.
So some of the stocks that we mentioned last week, and if you'd like to check out the entire article, I'm certainly not going to review that all again. It was infrastructure stocks to buy as the $1 trillion flow in. At investorsplace.com, the stocks he mentioned was VMC, that's Vulcan Materials, U.S. Concrete, USCR, Now, Vulcan is buying U.S. Concrete. It will close in the second half, but you can still buy USCR stock. Nucor is NUE, the steel company. United Rentals, largest rental company for heavy equipment. URI, Martin Marietta, MLM, Caterpillar, CAT, and American Tower, the 5G tower company. It's a tower company for all the cell phones, but 5G coming into vogue. AMT was the symbol there. I told you I brought along a basket as well last week, but I didn't have time to get that in. This is a unit trust from First Trust Securities. And it's one way, DC, instead of trying to pick the individual stocks so you can buy them all in a basket. There are several ways. I will say, for full disclosure, from the last article, we do own some American Tower. We do own some Caterpillar, and we have owned Nucor Steel. In this, we do own some of the First Trust U.S. infrastructure company, but this is not a recommendation from me to you. I do not know your needs, your suitability, if this is something that would fit your portfolio. So work closely with your own financial advisor to see if this may be something worth doing your own due diligence on. And as always, we can get you out the information you need to make a wise investment decision, free of charge or obligation. You know where to find us. This is the First Trust U.S. Infrastructure Series number 24. So let's just break it down. What is a unit trust? A unit trust is a fixed collection as opposed to a mutual fund, DC, or an ETF where there may be a manager buying and selling and changing the portfolio. This is a fixed portfolio. I believe there are 30 stocks in this portfolio. It runs for 2 years, and then it resets after 2 years if you want to stay with it. It is fully liquid along the way. You don't have to hold it for 2 years. But after the initial 2-year period, it will reset with all new stocks and reset the portfolio for you. It was currently, and when I brought this last week, trading at a 3% discount to its original offering price of $10. And this, I brought it along, DC, just to give you a flavor for some of the names that are being kind of talked about in the infrastructure area. And a lot of investors are looking at ways to have a position in infrastructure, but possibly do it as a basket of stocks, as we said, as opposed to one. Some of the names in here, Generac is the top holding. The generator company, of course, yes. Yeah. Dover Corporation, Nucor Steel is in here. Emerson Electric is in here. Eagle Materials, Martin Marietta also in here, as well as the Vulcan Materials from the last article. Parker Hannifin is here. Deere & Company in here as well. And there are several others. Again, if you'd like more information, this is one way to do it as a basket. There are also ETFs available. There are also mutual funds in this area. So please do your own homework and see if it may be suitable for you. But DC Taylor, there is going to be, one way or another, a lot of money being thrown at the infrastructure area.
Oh, yeah, no doubt.
It's coming.
Yes.
And your taxes are going up.
All right.
Well, DC Taylor, I know we're coming up on a break, but let me remind everybody, stay with us, because coming up, we are going to give you those inflation hedges for this week. I've got a value idea, and value stocks generally at the beginning of inflation do very well in the S&P 500. We'll talk about that as well. And beyond that, we'll catch you up on where we stand in the markets year to date. And also, we have some stock ideas for today's program, perhaps in the blockchain area, perhaps in the biotech area. We'll see what we can fit in, DC Taylor.
Very nice.
We'll get some of them in there. Right. So stay with us the entire hour, won't you? I promise to make it well worth your while, and you will be all the wiser for it. Let's thank our friends right now at Seidel's Restaurant in North Scranton for sponsoring this portion of our program. A great Italian-American bistro right in your own backyard. Easy on, easy off access off all the major roads in the area, DC Taylor, right on Main Avenue in North Scranton. Seidel's has a wonderful, relaxing, casual atmosphere, great nightly specials, DC Taylor, a great time of the year to check out my friends at Seidel's Restaurant. Why don't you pick up your phone right now and get your reservations? I promise you, you will not be disappointed. Your financial future with Nick Colarossi of NJC Investments. back after this message from our friends at Seidel's.
If you're searching for a special dining experience, Seidel's Restaurant is your home for great taste. Seidel's Restaurant is one of Scranton's elite fine dining establishments, specializing in Italian-American contemporary cuisines. At Seidel's, generous size entrees are prepared with only the highest quality ingredients. So whether you're having a meal for business or pleasure, it's sure to leave a lasting impression. Seidel's Restaurant has mouth-watering Italian-American contemporary cooking with a delightful ambiance. At Seidel's, you are certain to find unique specials for what you're craving. If you can't find an entree off their elaborate menu, just ask the chef. He can create an off-the-menu meal for you. At Seidel's, the owner is also the chef. Seidel's is located on the corner of Main Avenue and Tripp Street in North Scranton. They are now accepting holiday party reservations and on- and off-site holiday catering. 343-6544. That's 343-6544. Make it special. Make it Seidel's.
Welcome back to the Your Financial Future program on 94.3 FM The Talker. My name is Nick Colarossi. I am a certified retirement counselor with NJC Investments in Clarks Green, Pennsylvania. And I'm joined this morning by producer extraordinaire helping me along, Mr. DC Taylor of Bold Gold Radio fame.
Yeah.
Here on this last weekend of August 2021.
Wow, here we are.
Right. So we're hopeful everybody is enjoying their summer weekend, and thanks for staying with us here on the program. And before I move on, I have to thank you, Mr. DC Taylor, for doing your mad dash down the hall. He does it every Saturday morning right about this time, brings us each back a piping hot cup of coffee. What is it that we have in front of us this morning?
I am hearkening back to my top 40 radio DJ days, and they gave us a brand here of coffee called the Top 8 at 9.
Top 8 at 9.
That is to say, it's 8 o'clock coffee, and we're enjoying it at 9 o'clock in the morning.
I knew that already. The dark roast, Italian dark roast from 8 o'clock coffee. My favorite. Thanks for serving that this morning.
You're very welcome.
And we urge everyone, hey, why don't you grab a cup of whatever it is that gets your early Saturday morning started? Sit back and enjoy the rest of our program.
Who let the dogs out? Who let the dogs out?
Oh, so you know what's coming up next.
Right.
We talked about a value strategy, and I can't think of a much better value strategy than the Dogs of the Dow strategy. I received an email last week, DC Taylor, from First Trust Securities. They run a portfolio called the Dow Target 10 portfolio. This is their August series, and they wanted to highlight it to me, and I'm going to highlight it to you. We don't currently own this series, and it's not a recommendation from me to you, but something you may look into. It may fit your portfolio. It is a very, very traditional strategy, a value strategy, and the very simple part of this, DC Taylor, is it is a buy low, sell high strategy, and it forces you to do it.
Okay.
You know, because when things are going high, you say, oh, no, it's going to keep going. Just let it go.
Right.
And when things are going low, they'll just keep going down forever. It's hard to kind of buy when things are low and sell when things are high. This very strategy makes you do that. It keeps you disciplined. It puts discipline in there for you if you can't discipline yourself, right?
All right.
And that's kind of helpful in many different ways. Remember, on my list of hedges for inflation, one of the best places to be at the beginning of inflation, and in my opinion, that's where we're at right now, DC.
Right.
Is the S&P 500 and leaning towards the value side, because when interest rates start going up, it has a bigger potential to harm the growth area than it does the value area, the dividend paying area. Well, this strategy, let me give you some of the highlights that they put across to me. The historical 12-month dividend distribution rate on this trust holding is 3.44%. They are trading below. The companies in here are trading below their highs. The average company is trading 9.68% below their 52-week high and 22.23% below their all-time high. Now, these numbers are from August 20th on 2021. Their yield, the dividend yield, is higher than bonds. Stock dividend yields are higher than the company's 5-year corporate bond yields right now. And also, they say they're at attractive valuations with the average PE, price to earnings ratio, at about 20.21%. That was as of August 23rd. What is this strategy? It's very simple. It takes, how many companies, DC Taylor, in the Dow Jones Industrial Average?
30.
There are 30 exactly. That is correct. This strategy takes the 10 highest yielding companies. So why does it look at their dividend yield? What does it mean when a company's dividend yield is going up? What is happening to the stock price?
It's going down.
That is correct. So when a company's yield has risen, that's usually, almost always, because the stock price has dropped. So it takes those 10 highest dividend yielding companies within 30 of the best known stocks in the world, right? The Dow, you'll know all 30 names in there, DC.
Right.
And it takes them when they're low in value compared to their peers. The portfolio runs for 13 months. Why 13 months? Because if you're doing this in a traditional taxable portfolio, it would be long-term gains. So it takes this portfolio 13 months, and then it resets it automatically for you 13 months down the road. It kicks out any that have gone up in value. It brings in the new low-priced, so you're constantly buying lower and selling higher. It makes you do the right thing, which is so hard to do. But as an investor, if you can train yourself to do that, that is certainly the way to go. Let me give you the names in the current portfolio. They are 3M Company, Amgen, Chevron. Chevron had a big day on Friday. Cisco Systems, the Coca-Cola Company, Dow Incorporated, IBM Corporation, Merck, Verizon, and Walgreens. Heard of any of those, DC?
Every single one.
Every single one. You're buying quality companies. You're holding really for the long term, except you're rebalancing every 13 months, selling high, buying low. This is a simple value strategy, but a long time tested value strategy. And if you would like more details to see if this is something that may be suitable for your own portfolio, you know where to find us at NJC Investments, 570-586-5030. I'd be happy to get these out to you free of charge or obligation. Thanks again for tuning in to the Your Financial Future program here on 94.3 FM The Talker, and thanks for helping to make us the #1 financial hour in all of Northeastern Pennsylvania and beyond. And DC, that brings us to my favorite part of the program, where we like to catch you up on where we stand year to date in our markets. But before we do that, you know that I always like to give you that hot tip on some of the best investments that you can ever make. That is investing in your family, investing in yourself, and investing in your own community. I have two quick ones here today, DC.
Yes.
And the first one from Scranton, Pennsylvania. I call it the cultural center of the known universe.
Yeah.
Well, if it's not that, I'll tell you what it is. It's the political center of the known universe.
Sure.
Not only were Hillary Clinton's parents from Scranton, Joe Biden, also born and raised, at least for a couple of years, in Scranton. Do you know who else politically is from Scranton?
The governor of Alaska.
The governor of Alaska. Not only is the governor of Alaska born and raised in Scranton, he was born and raised one block away from me. He is about a year older than me, and his father was my Little League coach.
All right.
So I do know the governor of Alaska. If ever you want to go up there fishing or anything like that, DC, let me know. I am connected to the governor. He's a great guy.
Yeah.
We called him, it's Mike Dunleavy, Governor Dunleavy. And growing up as kids, we always called him Nature because he was always out playing in the woods. Boy, did he find the wilderness, and now the governor of Alaska. How about that?
That's great.
Well, anyway, back to our cultural event at Naog Park in Scranton. Scranton. I spent my whole entire childhood there, DC, especially in the summers when there was the zoo and the kiddie rides. No longer there, but what they do have right now, the nice band area. It's at 500 Arthur Avenue in Scranton. A free concert tomorrow. The Phyllis Hopkins Electric Trio will be playing absolutely free of charge, 5 p.m. Nice Sunday afternoon concert, 5 p.m. at Naog Park. Bring the entire family, bring a lawn chair, bring a blanket, little picnic basket if you like, but absolutely free concert tomorrow, Sunday at Naog Park. And one other quick one, don't forget, Wally Fest is going on, Wally Lake Fest going on this weekend.
Yep.
There's a lot of great music, a lot of great vendors right in Hawley, Pennsylvania, different locations. You can check the website for Wally Fest going on today and tomorrow.
All right.
What do you have for us today, DC?
I want to give another plug for this race next Saturday of Labor Day weekend, and also the Saturday of La Festa Italiana weekend. It's the 9th annual Captain James R. Minicozy Memorial Race. They're going to have a 5K run, a 1 mile fun walk. You should sign up. Runsignup.com is a great place to sign up. Runsignup.com. Look for Minicozy. It's Minicozzi, the Captain James R. Minicozy Memorial Race. And it benefits. There are plenty of awards for different age categories, men runners, women runners. And when you register there to pay your fees, that benefits the Boys and Girls Club of Northeast PA's Christmas party and also college scholarships.
That's a great idea.
Absolutely. So please sign up. Just search for MINICOZZI, Captain James R. Minicozy Memorial Race. You can find that on runsignup.com. Get in there and lace up your sneakers and get ready for next Saturday.
That is great. Saw something on that in Friday morning's paper. A terrific cause. So thank you, DC.
Good. All right.
Time to get back to finance now, and here is where we stand in our capital markets as of August 28th, 2021. The Dow Jones Industrial Average now up about 16%. But DC Taylor, I've got news. It is now the third of the three in the horse race, the great horse race, out of the NASDAQ, the S&P 500, and the Dow. The Dow was closing in with the S&P 500, and it's still doing well, up 16%.
Yeah.
Is a great year for the end of August, right? Because the average on the S&P and the Dow about 10% per year long term. Dow up 16%. But look what happened to the NASDAQ over the last week.
What happened?
Just when we've been told that higher interest rates are coming, move to value, it's going to be a value story, and value is outperforming growth so far in 2021. But somehow the NASDAQ is now up above the Dow. The NASDAQ up 17% year to date. The Dow about 16% year to date. But the S&P 500 leading them all up about 19.8% on the S&P 500. That's like 2 years worth of return so far in 2021 on average, right?
All right.
The average PE on the S&P right now is about 21 times earnings, just under 21.9 times earnings. I bring that up, DC, because last year, the average PE on the S&P 500 was 26 times earnings. I'm looking now at forward PE estimates. Last year, 26 times earnings, 21.9 right now. Why is that important? Because everybody's saying the market is so overvalued. This would tend to say no. The PE ratios are coming down because earnings are going higher. We're going to give you just a few highlights of this week's earnings in just a moment, but the PE ratios are coming down, earnings are going higher, and the markets are going higher. That's all a good sign. 10-year Treasury yield at about 1.3%, staying very low. Traditional, again, that historic yield is over 6%, so you know that interest rates are historically low, and so far not a lot of movement from the inflation sectors of the Treasury yield or the price of a barrel of oil, which is $68 a barrel. Now, that's come up just a little bit, but I think a lot of that has to do also with the storms that we've seen, and the potential. I think there's another one brewing in the Gulf of Mexico, and that's causing prices to rise just a bit. But $68 a barrel, up a bit from last week, but still not into a danger zone where we would say, okay, it's a sure sign of higher inflation.
Right.
We'll see how that goes. Let's just finish up, DC, with a couple of highlights from earnings. Now, remember, earnings and interest rates, higher profits and interest rates are what's keeping these markets going. That is why we're seeing all-time highs. Why? Because this earnings period, probably the best in history. Now, of course, we're coming off a terrible year in 2020 with the pandemic. However, we're also seeing revenue rises above 2019 levels in some of these companies. Two that reported, these are interesting. They were both down a little bit on Friday. In the computer area, Hewlett-Packard, HPQ, and Dell Computers, DELL. Both posted good numbers, although Hewlett-Packard missed just a bit on the revenue numbers. They did beat on earnings per share. Hewlett-Packard up about 18% year-to-date, trading at about $29 on Friday. And Dell, which was down a little bit, about $4 on Friday, they're up 32% year-to-date, even with that on their stock price, DELL, trading about $97. And they beat easily both top and bottom line. But the reason both were muted, Hewlett-Packard down just slightly, Dell down about $4 on Friday. You know why, DC?
What was that?
They can't make the parts fast. They can't ship the computers fast enough.
Right.
That's a good reason that's a positive, not a negative, people.
Okay.
Right? Those parts will eventually make their way to Dell, and those computers, those back orders will be filled. This is a good economy right now as we see it. That's why we're seeing market highs. And I'll finish up with Salesforce.com. I think they came out on Wednesday night. CRM is the symbol, and this revenue rising 23% on this big company. That's year over year. This is enterprise software company, Salesforce.com, trading at about $268. They were up about 5% on Thursday morning after those earnings on Wednesday. 20% year-to-date return so far on CRM. So Hewlett-Packard, Dell, and CRM all doing well year-to-date. The problems with Dell and Hewlett-Packard, my opinion, that's a good problem to have, that you can't ship your product fast enough. You'll get that fixed, right, guys? So the key here, DC, is almost 90% of S&P 500 companies beating their earnings estimates easily, and those revenue numbers, the sales numbers, almost 90% above estimates as well.
It seems like things are going well for earnings.
That's right, but they'll be around again in another 3 months, so we'll hope that continues. Right now, it is going well, DC Taylor, and that is why the market is going well above all the other problems we have and all the other noise we have out there. Earnings and interest rates both in favor right now of higher stock prices.
Good.
Well, DC, let's take a break here. Let's thank our friends at Montrose Motors in beautiful Montrose, Pennsylvania. A short country drive out to my friends at Montrose Motors. They have the new lineup of Ford 21s, but also I'm sure the 22s will be out soon, won't they?
Yeah, I'm sure it's starting to get some 22s coming in.
That's right. You could probably do some pre-orders there as well. And not only that, they have those hard-to-find items like
pre-owned vehicles, top quality pre-owned vehicles, as a matter of fact.
That's right. And these are people you can trust. They're a family-friendly dealership. They have a great service department as well. So get out to Montrose Motors, and I'm sure they'll make you a great deal on your next vehicle. Your financial future back after these brief messages. I hope you'll stay with us.
Looking for a dealership where you'll feel right at home the minute you walk into the showroom? This describes Montrose Motors to a T. You know, that Ford dealership in the great little town of Montrose, Pennsylvania? Not only do they have a great selection of new Ford vehicles in stock, they also have an equal amount of quality pre-owned cars, SUVs, and trucks. It's just a short country drive to the no-hassle Ford dealer Montrose Motors on Grove Avenue. Ask for Andy Bennett or Doug Thomas. These guys really have never met a stranger. You'll end up friends.
Nestled in the rolling hills of beautiful Clarks Green, Pennsylvania, you will find NJC Investments, a capable small-town firm with local values working right here for the citizens of our own community. Whether it's retirement planning, college planning, or just building up that long-term nest egg, the advisors at NJC Investments have decades of experience helping your neighbors achieve their goals. Why don't you get to know NJC Investments too? You can reach us at 570-586-5030. That's 570-586-5030. And we welcome you to join us weekly as we broadcast the Your Financial Future program on 94.3 FM The Talker, Saturdays at 9 a.m. NJC Investments, helping to take the mystery out of your financial future.
Securities offered through Lee Baldwin Company, LLC. Member FINRA SIPC.
Welcome back to the Your Financial Future program with Nick Colarossi from NJC Investments on 94.3 FM, The Talker, on this here Saturday morning. I'm DC Taylor, sitting across the massive soundboard from Nick. Good morning, Nick. How we doing?
We're doing just great. I thank you for pushing all those buttons to try to make me sound good on this Saturday morning.
Absolutely.
And it's the
knobs and twisties.
You do just fine here, and not only just here, he has his own radio program each and every weeknight. That is Mr. DC Taylor. Weeknights on our sister station, the River 105.5. I think he starts at about 4 o'clock.
Yeah.
Goes until he feels like it, I think. No, till about 8 every night except Friday.
Yeah, they cut me off about 8 o'clock. I'd go on all night if I could.
Great classic rock music. Great classic wisdom.
Sure.
Wit and wisdom from Mr. DC Taylor. I highly recommend that program to everyone.
Thank you. Yes, I appreciate you tuning in. Occasionally, I dig up a lot of quotes from 70s and 80s movies and TV shows. That's apparently what I seem to go to in my mind. And so my mind will spill out onto the airwaves.
And it's a great mind, and it's a great program. We enjoy all the humor and the wit and everything that goes along with it.
You got it. It's my pleasure.
All right, DC Taylor. Well, I want to turn now to another inflation hedge idea that everybody keeps asking about. It has not worked.
Right.
Year to date.
Okay.
It has a storied past as a hedge against potential inflation, but we are, I think, seeing inflation in this, although it is picking up over the last week to 2 weeks, is still negative year to date, and that is gold. Mm-hmm. There's a couple of different ways, there's many different ways you can invest in the precious metals. I brought along 2 examples, not recommendations from me to you. I don't know your particular needs or suitability, but I want to cover as many inflation hedges as I can and have you prepared.
All right.
And I don't suggest one over the other. Just like everything else, DC Taylor, stay diversified. And if you're going to hedge for inflation, use several different hedges, not just one. That is my opinion. But gold, GLD, is an ETF that tracks the actual bullion, tracks the price of gold. So that is a way to invest directly in the gold market, the price of an ounce of gold. Mm-hmm. It will follow it pretty much precisely, not exact, but real darn close. GLD trades daily on the market, trading at about $169 right now. $186.99 is the 52-week high. 157.13 is the 52-week low. You would think in this environment where everybody's so concerned about inflation, we saw that poll a few weeks back, more concerned about inflation than COVID, more concerned about inflation than Afghanistan, right?
Yeah.
And gold is still down. GLD is down, coming into Friday, down 5% year to date.
Okay.
Just thought I'd highlight that for you.
All right.
I also brought along an example of a way to follow the precious metals market through a mutual fund. Now, this is one we do own for certain of our clients. We do own some GLD as well for certain clients at NJC Investments. Let me be right up front for full disclosure. But this particular fund, this is from Fidelity, and there are certainly many, many mutual funds in precious metals. There are certainly many ETFs and other ways to invest. This is just an example. The Fidelity Advisor Gold Fund, and these are the C shares. The symbol is FGD. FGDCX. This leans more towards the gold mining companies, although it does have some gold in here. It does have some silver mining in here, some other precious metals. It leans heavily. Let me give you the top 5 holdings, and you'll see that. Newmont Corporation, Barrick Gold Corporation, Franco-Nevada Corporation, Wheaton Precious Metals Corp., and Agnico Eagle Miners Limited. I'm not familiar with that company, but that is one. Those are 5 of 47 holdings in this precious metals fund. Again, Fidelity Advisor Gold Fund. This fund, DC Taylor, year to date, minus 12% coming into Friday, minus 12%. We gave you the S&P 500 up almost 20, minus 12% right now on this gold fund. The average annual return, according to Morningstar, over the last 3 years, 17.2% per year. Okay. So I would say it has, has some doing if it's going to catch up to those numbers over time, but minus 12%. This is a 3-star Morningstar fund. Morningstar rates them between 1 and 5. 3 stars would equate out to a hold rating. Now, stepping back to GLD and also for this fund, over the last week, they have gone up in value. GLD, even though it's down 5% year to date, was up 1.7% over the last 5 trading sessions coming into Friday. Okay. So there is a little bit of movement recently. I don't know if that'll hold up, but another idea in hedging your portfolios for the potential of higher inflation. And for the other side of that equation, DC Taylor, on Friday, the Federal Reserve Chairman, Jay Powell, said, no, these inflationary pressures are only transitory. He's staying with that script. There are some that believe him. There are others that don't. The good thing is we'll figure it out down the road, right?
All right.
All right.
Well, there you go. Nick, I got the studio hotline blasted in my face right now. A big light blinking. You know what that means.
It either means you're under arrest or Mitchell Dimitrick is calling in to do our Mitchell's Mailbag segment.
Yes, it is time for Mitchell's Mailbag here on the Your Financial Future program. This is where we answer your questions. We love hearing from you. Any questions you got, please send them via email, nick@njcinvestments.com, and put in the subject line Mitchell's Mailbag, and then put your question in the body of the message. I don't have to tell you that, but we will make sure when you put that in the subject line, Mitchell's Mailbag, will make sure Mitchell Dimitrick, our always intern, gets all the questions and he's able to get them together every week. Hi, Mitchell. Via FaceTime audio. How are you?
I'm doing well. Good morning, DC. Nick, what a beautiful Saturday morning it is today.
It is certainly a beautiful Saturday morning. It's great to hear your voice, Mitchell. So we are happy for that, and we're looking forward to your questions this morning.
I'm looking forward to asking them. I think I've got some of the best questions in Mitchell's Mailbag.
All right.
This Saturday.
Sounds great. We'll do our best to answer them, right, DC?
Absolutely. Let's get right into it. Question number 1. Go ahead, Mitchell.
Alrighty. Question number 1 comes from Todd in Hazleton. Todd asks, I have to admit, after the 2020 presidential election, I moved all of my investment accounts to a money market. Do you think now is a good time to move it back into a diversified portfolio?
All right, Todd in Hazleton, thanks for listening. And DC, he moved all his money right after the election, got nervous, right? Yeah. Obviously, Todd is a new listener, right? Because he would have known that we said not to do that, right? Keep your politics out of your portfolio. This country can succeed under Democrats, Republicans, or anybody in the middle, right? So keep looking forward towards the long term. But I get it. A lot of people got nervous after the elections. I hear it. Is this a good time to get back in? DC Taylor, what do we say at the end of every program? There is
never a bad time to make a good investment.
That's exactly right, Todd. DC Taylor hit it right on the head there.
Yeah.
There's never a bad time to make a good investment, but I understand we are at all-time highs or very near all-time highs on all averages, and it's hard now to make that decision. Like you said, that's why we don't jump all the way out, because when do you jump all the way back in?
Right.
I think, and this is something you want to bounce off your own financial advisor, but my best opinion would be leg your way back into the market slowly. So maybe take 10 to 25% of your assets and start rebuilding your diversified. Remember, we said diversified portfolio over time. Maybe 10% this month and then you're up to 20% the second month and so forth.
Yeah.
Or you can do a little bit quicker, but you want to work back in slowly into a diversified portfolio for the long term. Now, I don't know his age, I don't know his goals, so I can't give you exacts. That's why I say to work closely with your own financial advisor. But if I can help you, you can always call me at the office at 570-586-5030.
All right. Here's question number 2. Mitchell, go ahead.
Alrighty, question number 2 comes from Chris in Wilkes-Barre. Chris asks, at NBC Investments, do you act as a fiduciary for your clients?
Chris asks from Wilkes-Barre if we act as a fiduciary for our clients. I think what Chris is getting at, there's commercials on TV, I see them all the time, of a certain company that I don't have a heck of a lot of respect for. And we are fiduciaries. We are all. Let me tell you one thing, Chris. We are all fiduciaries for our clients in this industry, or we would not be in this industry. We are heavily regulated by FINRA, by the Securities and Exchange Commission. What does a fiduciary mean? Basically, it means, DC, that we have to put the client's best interest ahead of our own.
Yeah.
Right. And we all do that, and we're watched closely.
Oh, sure.
So I think those commercials, if that's what Chris is alluding to, are a little bit misleading. You know, the ones that say we do better only when you do better.
Right.
What that means, it's you're paying an advisory fee versus a traditional brokerage fee. So you would pay an annual fee, maybe quarterly, but broken down quarterly on your overall assets. So you pay a higher fee as your asset base went up. There's nothing wrong with doing that. However, a lot of people choose to have a traditional brokerage account, especially if you're a buy and hold investor. Let's say you want to buy 1,000 shares of PP&L and hold it for 10 years.
Right.
Why the heck would I charge you an annual fee to do that while you're not doing any kind of other investing? You don't. In that case, it might not work out for you.
Right.
The good thing is, Chris, at NJC Investments, we are one of the few places that can do both. Most of the larger firms have moved over to all advisory fee basis. Why? Because they make more money doing that.
Yep. Right.
But most of the firms have moved into that structure. We can do that where it makes sense for clients, and it does for many clients, but we can also do a traditional brokerage account where it makes sense for the other clients.
Okay. Is it safe to say, I don't know, maybe I'm getting, if they, in those commercials, they say, oh, we are a fiduciary. Is that basically like a store saying, we provide you with fresh air and oxygen for your shopping experience?
That's well put.
Okay.
Yes, we give you great service.
Exactly.
Well, you better, right?
Yeah, you better.
Okay.
Exactly.
But a fiduciary, that's a little bit, I think that commercial is a little bit misleading. We,
Sure.
as financial advisors, we all must be fiduciaries.
Absolutely. Okay. All right. We got time for one more question in Mitchell's mailbag. Go ahead, Mitchell. What do you got?
Alrighty, last but certainly not least, question number 3 comes from Allison in Dunmore. Allison asks, you often talk about hedging portfolios against the possibility of higher inflation. What will happen if we get higher inflation, and do you expect the markets to crash?
All right, Allison and Dunmore, good question. We talked a little bit about that already today, hedging your portfolios in case of higher inflation. What happens? Is there a magic day that the light flashes and the market crashes? No. Again, at the beginning of higher inflation, one of the best places to be is the stock market. And you're seeing that. The stock market is hitting all-time highs. Why? Because there's a lot of money being produced and flowing into the system. Yes, that, to me, is going to create inflation. It's also going to create at least in the beginning months or years of it, higher stock prices. So no, I don't expect the markets to crash, but I do expect more volatility along the way. I do expect certain areas of the market to suffer. And I think it's a good idea to start looking at building hedges for inflation. What are those hedges? It could be floating rate debt. It can be things like TIPS funds, treasuries wrapped for inflation. It could be dividend paying stocks, more value oriented stocks. It could be high yield and convertible bonds. It can be commodities. It can be precious metals. There's a lot of different ways to go. Some are working right now, some aren't. And that's why we say build it slowly and be diversified. That's my opinion. If you think we're getting higher inflation, we'll see how that works out.
All right. Well, there you go. Your questions answered on the Mitchell's Mailbag segment of Your Financial Future. And you can get questions into us. We love to hear from you via email. It's nick@njcinvestments.com. And make sure you put in the subject line, Mitchell's Mailbag. Thank you, Mitchell Dimitrik, our always intern, for getting those questions to us every week.
DC Nick, thank you for having me on the show each and every Saturday morning.
Well, thank you so much for taking time to do it for us. We really appreciate your service to the program, and we hope you have a wonderful rest of your weekend, Mitchell.
You both as well. I'll talk to you both next week.
See you then. That again, Mitchell Dimitrik, our always intern here on the program. He calls in every week for us, DC Taylor. Takes time out of his busy Saturday mornings to join us, and we're always thankful for that.
That's good. Always good to hear from Mitchell.
Yes, it is. Well, don't go anywhere. We have one segment to go. We have some investment strategies to talk about I think you're going to like, including 5 blockchain ETFs. If you're interested in cryptocurrency, if you're interested in the Bitcoins and the Ethereums and all those other things, I don't even know what they are down the line. Sure. If you're interested in that area of the market, and so many people are, I have ETFs to review. These are baskets of investing in the cryptocurrency area. You don't want to miss that. Your financial future, back after this brief message. Please stay with us.
Mr. Wrongway, it's Big Box Brokerage calling. The market's been falling. Maybe you should sell.
Well, get me out! Get me out!
Mr. Wrongway, the market's rebounding. It's going higher.
Well, get me in! Hurry up! Get me back in!
Mr. Wrongway, more bad news today.
What? Get me out, for goodness sake! Get me out!
Don't be Mr. Wrongway. Let us show you what we believe is the right way to invest. Trying to time the ups and downs of financial markets is nearly impossible. I'm Nick Colarossi, a certified retirement counselor and host of the program Your Financial Future, heard on 94.3 FM The Talker every Saturday morning at 9 a.m. At NJC Investments, we believe a solid investment plan paired with a consistent dollar cost averaging program can help you reach your long-term goals, like retirement and college planning. Call us today at 570-586-5030 or reach us directly through our website, njcinvestments.com. NJC Investments, helping to take the mystery out of your financial future.
Securities offered through Lee Baldwin Company, LLC. Member FINRA SIPC.
Welcome back, and thanks for staying with us here on The Talker. This is the Your Financial Future program with Nick Colarossi of NJC Investments, helped along by Mr. DC Taylor of Bold Gold Radio fame. Another great Saturday weekend, DC Taylor.
Yes, looking forward to another fine weekend here in the summertime in the great Northeast.
Yeah, I can't believe the next time we come back to you, it will be September.
I know, right?
How about that?
All right.
Time moves on whether we like it or not. Sure. And let's move on with the program. Let's get to this article from Faizian Farouk. This came out last week. It was covered by investorplace.com. If you'd like to check out the entire article, I'm just going to, as always, skim the surface here. And you never make an investment decision by something we're talking about quickly on the radio. Make sure you do your own homework. But I think this is an interesting area of the market because we get so many questions. Can you buy Bitcoin? Can you buy Ethereum? Well, we can do those through the trusts from Grayscale. GBTC is the symbol for Bitcoin. ETHE is the symbol for the Ethereum, the Grayscale Ethereum Trust. If you want to follow those, we can do those in investment accounts if they are suitable for your portfolio. But this is interesting because these are cryptocurrency-oriented exchange-traded funds, which are baskets of investments as opposed to one. So the theme of this article, DC, is crypto ETFs are relatively, and we use that closely, relatively less risky and provide better returns in the long run. That, according to Faizian Farouk, writing for InvestorPlace.com. He says ETFs are regarded as low-risk investments. They hold a basket of stocks, so think of them like a mini portfolio, in contrast to the notorious volatility you've seen in things like Bitcoin, the world's largest cryptocurrency. Remember, in April, I think it set an all-time high of $65,000 per coin. And then in June, it dropped from 65 in April down to $30,000 in price, now up over $48,000 recently. That's what we call volatility.
Yeah.
More volatility than most investors need. But this is a way to potentially cut down on that volatility, diversify your assets in this area. And the first of the five and we do not currently own any of these. Let me say, add in JC Investment. So I'm interested in doing my homework, as I always urge you to do the same. The first investment mentioned here is the Amplify Transformational Data Sharing ETF. Symbol is BLOK. This is up 41% year to date, more than double the S&P, DC. Says the major holdings here include Hut 8 Mining. Have you heard of Hut 8 Mining?
I've not, no.
I have not either, to be absolutely honest with you. This is a Canadian cryptocurrency mining company offering blockchain infrastructure. Riot Blockchain is also in here, RIOT. This ETF trading about $49, down from a high of $62.94. But also, he says that you get some diversification with companies like Square, SQ, in here. That's the digital payments company. This, again, trading at about $49 on Friday. Next is the Siren NASDAQ Next Gen Economy ETF. I think we should just stick with the symbols. BLCN, and this tracks the NASDAQ Blockchain Economy Index. It's intended to measure the returns of companies involved in developing, researching blockchain technology. As a low expense ratio of 0.68%, assets of over $276 million, currently trading also around $47 on Friday. This is up 16.8% year to date. Some of the holdings are Coinbase, Advanced Micro Devices, and Accenture, the accounting company. That's interesting.
Yeah.
Next, the third of these 5 blockchain ETFs to buy if you're excited about cryptocurrency, according to investor Faizian Farouk, writing for InvestorPlace.com, is the First Trust Index Innovative Transaction and Process ETF. These are too long, DC.
Yeah, seriously.
Let's go with LEGR as the symbol, and LEGR tracks the blockchain index, which measures the performance of companies that either actively utilize, invest, or develop, or have products that will benefit from blockchain technology. Blockchain technology, simply the way that the cryptos work. DC Taylor, if you can explain that to everybody, I'll sit back and listen.
Not at this point. I don't have that. No.
Not at this point? Okay. No. Per the ETF's investment policy, the fund normally invests a minimum of 90% of its assets in equity securities that are in the index and has a total of 100 holdings. And some of the holdings, NVIDIA is in here. Wipro, WIT, which is an Indian multinational offering in this area. Oracle is in here. I would never put those all together. So anyway, this index is up about 16% year to date. And I didn't tell you on Siren, BLC, and that is also up about 16% year to date. There's 2 more quickly here, DC. The Purpose Bitcoin ETF, BTTC, is the symbol. And this just came out this past February, and it has it already has surpassed $1 billion in assets under management, and it invests directly in physically settled Bitcoin. This trading at about $9 on Friday, up 40% in the last 3 months. And we'll finish up with KOIN, which is the Innovation Shares Next Gen Protocol ETF, and that is trading about $43, up 17% year to date. Top holdings are Microsoft, MasterCard, Nvidia's in here, Visa is in here. So those involved in the blockchain as well, and a good, decent year-to-date return.
All right.
If you'd like more information on those, let me know. We'll get that out to you. But let me just say right now, thank you, DC Taylor, for all your great work on the program.
You're very welcome.
And we'll remind everyone there is never a bad time to make a good investment. If you have any questions on anything we covered this morning, you can reach us at NJC Investments 570-586-5030. Thanks so much for tuning in this morning on 94.3 FM The Talker. May God bless you, and may God bless America. Make it a great week. We'll see you next Saturday.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.